Good morning. It's Monday, April 28th, 2025. It's almost 11 a.m. on the East Coast. And this is Robson at Goldfinger on co.ca, at CO Technician on X. And you're watching Goldfinger Capital on YouTube. Before we get into the market analysis, I'm going to run down the bigger picture and then we're going to get into some junior mining related stuff, including highlighting one particular company that has had a remarkable turnaround in the last year, transformation, so to speak. Before we get into that, I just want to point out my YouTube channel. So I've been working hard on the content in the last week. You can see it's been pretty busy last week. Eight videos up here in the last week, and I know that's a lot of viewing time, but I really want to invite you to take a look at all of it. I think there's a lot of good information in here, definitely some new ideas, some learning. Willem, Middle Coop, that was last week. That was a great conversation on X Spaces. Hercules Metals CEO Chris Paul had a lot of great feedback on that one. Garrett Goggin, um, gold mining bull par excellence. He really pounds the table on the gold mining sector and gives some pieces of wisdom from his experience as an investor in the sector. Um, George Ogilvy, CEO of ASCU, copper developer on the TSX, focused in Arizona at the Cactus Project. So that's a little more technical, that's company specific, but he offers some pretty good insights into the mood in Arizona and also some copper industry content in terms of the likelihood that copper produced in, let's say, Arizona, especially if you can produce copper cathode, which is 99.9% pure end product in Arizona, you're going to be able to receive a much higher value for your copper product than if you're just shipping concentrate to China, and also just getting into some of the smelting, the scarcity of smelting that we have in North America. Jordan Roy Byrne of the Daily Gold got a lot of great feedback on that one. That's an interesting conversation because you got two gold TA guys going at it and delving into narrative versus price action, technicals versus fundamentals, and the current setup, right, in gold and silver, and also in the mining sector, and Jordan's opinion on where we are in the in the gold mining bull market. And then Matt Geiger of MJG Capital. This one just went up this morning. Another great conversation where Matt talks about M&A in the gold mining sector, a company that he just recently added to the portfolio. He doesn't want to give away the name. And then later on, he talks about a rare earth stock that he has in the MJG portfolio. And that was new to me. That was completely new to me. So an invitation there. So looking at the broader market, so this is E-mini. This is just kind of how I look at 4-hour chart. You can see I drew a little cup and handle. My breakout level on Friday I was looking at was around 54.92. We did break through that. I was really trading against that level for the breakout, and it happened, so that worked nicely on Friday. Now here we are Monday morning, and I don't really have a strong opinion on this market here today. It seems like we're in this uptrend now. The momentum is with the bulls, so there's no reason to try to say that's the end of the rally or call a top here. But it feels like the energy is declining a little bit, decreasing. We're getting a little farther along here in this snapback rally. A lot of people are calling it a dead cat bounce. That seems reasonable to call this a dead cat bounce, but I don't know. It's tough. It's a tough call here, and that's why I don't really have a call on this market today. I think most likely we have a few more days of upside. So like I said, there's no point in really trying to call the top here. But it makes sense to me as well that as we get further along in the week, especially with payrolls, non-farm payrolls on Friday morning, we could be in for a reversal at some point later in the week where the Bears pick up the ball again and get control for for a little bit. But for now, this is Monday morning. I don't want to really fight this rally, this snapback in markets. And like, where could this rally get to? I'm not sure, but maybe 5650, 5700 later in the week is possible. And this is impressive because gold was under pressure last night, right? Like I was watching the gold futures around 10 p.m. on the East Coast last night, and they were testing down to this 3280 level again. It's looking pretty rough, but as bull markets do, buyers came in at support, and that's important. A key characteristic of bull markets is that they will get supported. They will find support at the big levels. When it's looking really dire, they'll turn up, right? And the same thing with bear markets, right? Bear markets, rallies will fail at key resistance levels, right? So this is impressive this morning, right? We held support on multiple tests of this 3280 level in the last 48 hours of trading. So could that be it? It's possible. I mean, if you look to the left, is that a triple bottom or is that a quadruple bottom? I don't know. You tell me. But I like to see this upside here that we're seeing in gold this morning. And then natural gas. So if you look at my X, I don't have it up because I don't want to have too many tabs up, but I called this out at the end of last week. Natural gas hit my radar at the $3 level at the end of last week. Also due to sentiment, it had the most bearish sentiment of any commodity last week. And actually, the daily sentiment index got down to 12 for 3 consecutive trading sessions. That's not something we see that often. And when you get that sentiment extreme with a really oversold market testing a major level, a major support level like the $3 level, it's just an attractive setup, right? So I called that one out on X, and it's worked out nicely. This has been a very nice start to the week here in natural gas, spiking 10% basically. And we have these outages in Spain, Portugal, and France, and while I'm sure the power will be back on later today, but it puts it into perspective when you have millions of people suddenly go dark, trains stop working, air conditioning goes off, the lights go off, the Wi-Fi goes off. I mean, life grinds to a halt, right? And this really helps to re-emphasize how much power is an integral part of our lives, right? And how many Western countries, like Western Europe, have taken for granted power, right? They shut down their nuclear power plants, they shut down their coal fired power plants, right? And a lot of Western Europe has put itself in a precarious situation depending upon Russian natural gas for a decade, right? And so I think that when you have this sort of outage, it brings this conversation to the forefront, and politicians and policymakers have to act. So I mean, if you ever needed a um, an example, an event to really emphasize how important nuclear energy is and how powerful it is to our lives, maybe this is it. And then also, natural gas, right? So um, the bull case, the long-term bull case for natural gas is very much intact. And the fact there's more, liquefied natural gas terminals coming online in North America, both in the US and Canada over the next 3, 4, 5 years, is going to create more demand for natural gas, and it's going to be able to raise the economics and the value of natural gas globally, and maybe start to narrow some of that spread that we see between U.S. natural gas, Western Canada natural gas, and European and Latin American prices. Um, This is the SPY daily chart. So again, like we got way oversold. We had a complete market panic capitulation in early April. Everybody knows about that. We had this incredible thrust on April 9th, right? This huge impulse, like one of the strongest single day sessions in history, traded around a bit, but now resolving to the upside. And if this is a dead cat, you got to ask, well, where does the dead cat stop bouncing? And like I said, I think 5650 to 5700 on the E-mini S&P is a reasonable upside target for this rally. And you can see, like, we're just testing this 40-day moving average today. There's some price action happening as I'm speaking, but yeah, it just feels like there's a little more to go here. People got really bearish, and there was just a capitulation, right? And so there's probably a little more to this rebound. If I look at the NASDAQ 100, the Qs, we're at a 50% retracement. So you could say, well, this is a logical place for this rally to stop. It's logical, but that's a little too easy. I think it's more likely that this kind of a rebound could go all the way to the 61.8 fib. Call me crazy, but maybe we get up to 485 or 487 on the Qs, maybe even later this week. I mean, this is a fast market, it's a volatile market, it's possible. But like I said at the beginning of the video, then I'd have to start to think that, if this rally gets a little more stretched to the upside, then that's the time that you want to be taking profits and then looking to get to the short side again. But we're just not quite. I just don't feel like we're quite there yet. Okay, that's my sense of the situation. But then I look at this. I look at the equity put call ratio dropping. So retail investors are getting heavy into calls again. They're not feeling like they need to hedge as much. I have some ODTE options charts I didn't even put into this presentation because I just thought it was too much. But there's a lot of gambling in this market, right? And you could definitely look, but they're also gambling on the put side too, right? So I don't. It's hard to break down the data and figure out exactly um, how much bias to the long side the retail traders are. I mean, it's clearly they are biased to. There's clear they are biased to the long side, but it's hard to gauge just how much. And I don't really know if that short-term data is really a strong market indicator. Although I look at this equity only put call ratio down to 0.46, and this is definitely not a bullish piece of data, right? This is a sign that um, all the fear is dissipated and we're long and strong again. XLF, and this is another one. So this is an important sector in the equity market, and here we are at this sort of confluence of moving averages between 48 and 49. And then also just look to the left on the chart. Look at how important that let's say 48.50 to 49 level has been. So this has rallied right back to important previous support, which should now be resistance, right? So it's tricky. This is a tough call. When it's a tough call, it's maybe best to do less or even to do nothing. Micro strategy. So this is one that I've been pointing out for a few weeks is displaying relative strength. Even took a long in this for a brief time earlier in the month of April, but now it's had a big run. I mean, it's had a big run. It's a big breakout move, and this is probably the leading edge of risk on in the market, right? So when MicroStrategy is really moving up, that's a risk on market, and that's what it's been the last couple of weeks. But now we have to ask ourselves, well, here's a red day, opened higher, and now reverse lower. So is this it, right? And I would be looking at MicroStrategy as sort of a leading market indicator of if to help be able to determine, to gauge if this rally is ready to roll over and the cat is done bouncing, so to speak. And then just as far as like trade ideas, again, I don't have a lot of them in this video, but OIH is one, right? So I'm long oil services. I'm long OIH. A lot of people look at this chart and they say, Robert, how could you be long that? That's a bear flag, right? It's just, it looks awful. The Trump is going to make oil prices go lower and all that, right? And I see the pervasive negativity and I love it, right? So when I see an awful looking chart like this and everybody telling me I'm wrong, I like it, right? So I can also make a case for this is an ascending triangle and breakout above 220 and we go to fill this gap up near 235, right? So that's how I see this chart, but I also have clearly defined downside risk. I'm definitely not going to let this one get under 200 on me. So I know my risk. I'm long from 213. I'm looking for a move up to 230, 235, and my risk is clearly defined on the downside. If you want to be even tighter on it, I think 208 is a level, right? You can stop out on a move under 208. But I like how this is building a base. I like the really strong negativity on energy and oil services. And I also really like how the new administration has sort of kneecapped this key industry in the US, and they're going to have to pivot, right? They're going to have to support the oil industry. It's part of their base. So I think this is an absolute tremendous buying opportunity. Fade the negativity in oil and oil services. And then, final large cap chart, just Cameco, right? So keep it simple, stupid. This, I should have bought this at 42 last week, but I didn't. But anyway, this is, it's the uranium stock, right? And when we have power outages in Western Europe, millions of people without power after they turned off nuclear power plants for the last couple of decades. Well, that's the best free marketing that Cameco could possibly get, right? So keep it simple, stupid. I do want to make a point here that I listened to a lot of podcasts over the weekend. Obviously, I see the news, I see the tweets. There's a very dire outlook on the U.S. and China, and the outlook and some of the talk out there, the analysis, the journalist coverage of the situation is not matching the market action, right? Like, look at these charts, right? The container ships sailing from China to the US. This is a crash. Shanghai copper inventories crashing, right? Now, some people might say, well, this is bullish for copper. Well, that's not how I'm choosing to use this chart. I'm choosing to use this chart as this is a negative sign for China, right? The fact they're drawing down their inventories that much, and maybe the consumption is not there. That's one way to look at it. You can look at they're over consuming, and that's why they've drawn down the inventories. I'm not quite clear. And then the this is the earnings calls, Q1 earnings calls. So a lot of negativity, right? Worse, weaker, right? There's not a lot of better or stronger being used out there in Q1 earnings. There's a lot more worse or weaker. So this is pretty strong when you compare back to 2008. We're basically getting close to 2008 levels in terms of the negative tone on corporate quarterly conference calls. And then again, this is another one of these basically three charts saying almost the same thing. Trade between the US and China is collapsing, right? So if trade between the US and China is collapsing, then why is the S&P rallying over the last couple of weeks? Yeah, I know it's snapping back from a big crash, but still, global trade is grinding to a halt. If there's no container ships coming from China, then U.S. consumers should expect half of the shelves to be empty a month or two from now, right? Right. So there's something that's not adding up here. There's something that just doesn't quite make sense. Something is wrong, or some narrative is about to change. And so we need to ask ourselves, what is wrong in terms of the narrative with all this negative analysis on U.S. and China trade and how we're going to have empty shelves in the U.S. in late May or in early June. Something's not adding up here, right? And so, when you come from a trader mindset, you tend to think the market is usually right. The market is smart. The market is incorporating data and analysis and special information from millions of participants globally. The market is seeing a resolution here, and maybe China and the U.S. agree to pause and sit down at the table to negotiate for whatever 90, 120 days, right? So that seems like the most reasonable resolution to this. And Trump touting the tariff revenue, I really think well, first of all, it's propaganda. It's propaganda to his base that they're going to have lower income taxes and they're winning the trade war, right? It's not rooted in reality. But then also it's part of the art of the deal. It's a negotiating tactic, right? Like, I'm enjoying this. I'm winning this. I can outweight you, right? And so this is the problem, though. This is a game of chicken between the U.S. and China, and China absolutely has the capabilities to, endure this for a few more months. It's not fun for them. It's obviously not what China wants, but they can endure it. And just the way their government is structured, the way their society is structured, it makes them much better equipped than the U.S. to endure an economic downturn, a trade war, et cetera, right? So this is a dangerous game. And I think that Trump already kind of showed his cards by talking really big in early April and then relenting a bit, as we saw, right? And walking it back now a couple of times. But your guess is as good as mine. But something just doesn't add up here, because if you look at these charts, you look at this data, you listen to any number of podcasters and market analysts, they're pretty much negative, unanimously negative. That doesn't quite add up to what we're seeing in markets, right? Anyway, speaking of markets, the TSX Venture. So I blogged this yesterday. TSX-V closed above key breakout level. Amid little fanfare, the TSX-V quietly closed above the 650 breakout level Friday afternoon. It did. It did. Look at that. And I didn't even notice it until the weekend. And nobody mentioned it on any of my timelines, and nobody texted me, right? So let's celebrate a little bit in a junior mining sector filled with pervasive negativity, so much negativity in this industry. Let's celebrate a little when things are going a little better. So I know the TSX-V is not 100% junior mining, but it's a reasonable proxy, and it certainly is representative of small cap Canadian equities, micro cap Canadian equities, and this is a head and shoulders bottom, right? So I talk in this Substack, which I invite you to read and subscribe to. I talk about some of the upside targets, what might play out here, and how maybe it's not going to be just so simply sell in May and go away again this year. But we'll see. I mentioned 4 juniors that sort of give a little concise, report on each one. But one that's definitely catching some attention is Onyx Gold. This is a company that drilled an impressive intercept at their Argo North target in the Timmins camp of Ontario, almost 70 meters, grading and averaging 3.4 grams per ton gold. That is a very big gold drill intercept, right? The CEO is very confident, sharp young guy, Brock Colterjohn, and he seems to think they have kilometers of this structure, strike extent of this structure on their ground, and the drill is arriving next month. right? So they got some warrant money coming in. They accelerated the rest of the warrants, so they'll have another million or so coming in. So seems like it's drill, baby, drill, and really get this market to bend to the Onyx Gold terms if you wanna finance it. So far, it seems like Onyx and Mr. Colterjohn are playing their cards well. Talked about Hanan, Sitka. Sitka had a hell of an intercept. We've started to become accustomed to these from the Blackjack deposit. 353 meters, grading 1.55 grams per ton gold, including um, below 500 meters down hole, a 109 meter wide interval grading 3.27 grams per ton gold. So we're seeing grade increasing at depth at Blackjack, and assays are pending for the follow-up hole, hole 76, the deepest hole drilled to date, drilled to 810 meters down hole depth. This is very interesting how they basically outlined a southeast plunging gold system, a gold corridor, and it seems like they're vectoring closer to the potential source of this gold system at Blackjack. And obviously they're getting pretty deep now. So now, when they're going past 500 meters, this is going to have to be underground mining. If it is mined in the future, it will be underground mining method. But when you're seeing the grades go up like this and the consistency um, of the consistency and the continuity of this gold system at Blackjack is very impressive, right? And so if they can continue to drill holes like this and extend it uh, along this southeast plunging corridor, this is a very impressive gold deposit. And then American Eagle Gold. So just some CEO insider buying on the market. A pretty nice base has been constructed here in AE, and the exploration season has begun. So they're starting with a helicopter magnetic survey, and then they'll start drilling probably by the end of May. They definitely by the end of May. 30,000 meter drill program, diamond drilling, 3 core rigs will be working 24/7 throughout the season. And you got to think like there's going to be a lot of drill results, a lot of news flow, and by the end of this year, I think investors are going to have a very good idea about the economics, the potential economics at NAC. There'll be a sufficient amount of drilling data. They'll have tested some of these untested areas um, in the south, in the north, and maybe even in the east. Yeah, so this is a big year, and it's always great when the company is not only fully funded, but they're more than fully funded for this drill program, even when they pay for all the 30,000 meters of drilling this year and all the G&A for 2025. The American Eagle Gold Treasury will still be very, very well endowed, probably for another full year of drilling and G&A in 2026. So that's a good situation to be in. That's a position of strength. And then my final topic for today is Heliostar Metals. I don't have anything really new on Heliostar. I just want to point out that last June, this company was sitting at 25 cents, and it was very unclear what the future would hold for Heliostar. Obviously, they have, the Ana Paula project in Mexico, which is high grade, and they had been talking about how they're going to sink a decline or extend the decline at Ana Paula into the high grade zone, and they're going to basically test mine a bulk sample. They had a few plans there, and that may still be in the works, but there is a huge breakthrough this company had last July Okay, and I want to identify it. It was this news release, right? They had just closed the financing with Heliostar. You have a company that has gone from an explorer with a pretty good project, pretty high grade gold project in Mexico that has a resource on it, but it was not entirely clear what the path forward was. Yes, there was this bulk sample plan. Obviously, they could do more drilling, but they go from a place of some uncertainty and a 20 million, 25 million market cap in June 2024 to a producer in 9 months, in less than 9 months. This almost never happens in the junior mining sector. This is such a rare white swan. It's not a black swan, it's a white swan. A very unusual circumstance. And I remember speaking with Charles Funk, the CEO of Heliostar, last summer. Actually, it was right after that transaction took place. I think it might have been August. Find it on my YouTube channel. And his confidence really exuded in that conversation. He really exuded confidence, and there's only certain things he could say because the deal hadn't closed yet. It wasn't going to close for another few months. I think it closed in November. But you could just tell that he had really pulled off a real coup for Heliostar shareholders, and he knew it. And then, go through the news releases. Eric Sprott participates in a financing, buys stock on the open market, et cetera, et cetera. There's a lot of news releases to delve into, but you can see the trajectory of the share price. Obviously, the move from 2,700 gold to 3,200, $3,300 gold has helped. It has been a serendipitous confluence of events that have worked in Heliostar shareholders' favor. But, the reality is, just take a look at this quarter, right? 1,400 all-in sustaining costs. So you can do the calculation on what their margins are when they're selling at 28.75, 50% plus profit margins on their gold production, 9,082 gold equivalent ounces. And, obviously this was an exceptional quarter, and they're basically telling us the rest of the year won't be as good on the cost side because they're guiding to 2,000 full year all-in sustaining costs, but still very healthy margins, production of 31 to 41,000 gold equivalent ounces. So this is now a significant cash flow generating company. And if they're able to execute on this guidance at an average gold price of even 3,000, you could make a pretty good case the stock is still not fully valuing in this transformation. Okay. And they end the quarter with 27 million US in cash with no debt. So this is remarkable. I mean, they have more cash today than their entire market cap was a year ago. Right? This is a remarkable, right? And I had to call it out, right? I'd have no position in the stock right now. I'm not making a call on the company. I just wanted to point out this incredible transformation, a stock that I have previously owned, I have previously, written about and highlighted to investors, and just the level of execution that Funk and his team have managed here in the last year at Heliostar is really exceptional, and it's something that we should applaud and celebrate in the sector, because quite frankly, there's so many negative people and detractors out there. In fact, I can remember a lot of negativity around Heliostar around the 2023 and early 2024 timeframe. A lot of people saying negative things about the company, even the CEO. And I'm not sure why, quite frankly, because I can think of a lot worse companies than this one. That's for damn sure. And, the fact is that sometimes we need to dream big, right? And like the plan of doing the bulk sample and going into production pretty quickly at Ana Paula is certainly aggressive. It certainly was aggressive and bold. And even this transaction that they pulled off last summer was aggressive and bold. I mean, even though they got these assets for pennies on the dollar, it's still not easy to move a company from an explorer to a producer in such a short period of time, right? It requires commitment, skills, and being willing to take risks, right? Because there's always a possibility of biting off more than we can chew in life and in business, right? So I got to applaud Charles Funk and his team at Heliostar. And, sometimes dreaming big and going big can pay off in a big way, right? And I think that's what we're seeing here. And I continue to wish this company the very best, and hopefully shareholders continue to do well, including Eric Sprott in Heliostar shares. And also it's an example of when the breakout happens, like in late January, sometimes there's no real need to overthink it. The price action was telling you that good news was coming, and good news has come, right? And I should also just mention that it's not just a production story. They're drilling at Ana Paula now. So they got 2 rigs going right now. They literally started this next phase of drilling, 15,000 meter drill program at Ana Paula. And Ana Paula is a legit gold deposit, like legit, like no joke. So I'll be really interested to see the results from this drill program. But this company is not a one-trick pony at all. They've got a lot going on, and they're using their production cash flow to fund 15,000 meters of drilling at Ana Paula, right? And the kind of drill intercepts that you can pull at Ana Paula, 16 meters of 16.7 grams or 24 meters of 5.1 grams, right? Like that's the kind of stuff that could make this deposit even bigger and reward Heliostar shareholders even more. So that's it for me today. Heliostar Metals, HSTR, and the TSX-V, a great transformational story in the last year and a tremendous performance in the share price. Thanks for tuning in, everyone. Again, if you enjoyed this, please hit the like and subscribe button, and have a powerful trading week.